All right. So, as threatened, we're going to do fabricated metal this time and not confuse our models. So, I'm going to go ahead and share. And I won't jump ahead to a different model. Fabricated metal is on a tear. So, and it looks like it's been fairly consistent with where it's coming out of COVID, but right around the beginning or into the middle of second quarter of 2022, it looks like it's really going to take a good rise. And I'm not sure if that's because of the way the supply chain is going. There's nothing in the numbers that indicates a big shift. It's because it was already on an increase. And it's consistent with where the model was showing us before, but it's taken out the dip that we used to see before, which was down here in this area.
Yeah, we work a lot with an organization called the Fabricators and Manufacturers Association. So we pay a lot of attention to the fab sector. And it, of course, is an extremely dependent sector. It is the one sector that depends on what's happening with automotive, what's happening with aerospace, with appliances, with anything that's going to use metal that is bended and mutilated, spindled, whatever it is, into some new product. What's been happening with fab metal is that all of the areas that it sells into have been experiencing growth. You've been seeing growth on the automotive side, despite all the challenges of silicon chips. You have seen growth on the aerospace side. We talked about that earlier. You've seen growth on the appliances side. So everything that they feed into has been doing quite well, with two major improvements over the last year, and that's medical, which has just skyrocketed. I mean, everything in a medical facility is fab metal. I mean, it's just stainless steel rules. And as a result, you're seeing a lot of growth there. And the other area that's getting a lot of attention, we talked about all the technological advances and robotics and all that. Those are all made out of metal. And so whether it's housing these things or building these things, the fab sector is really on fire. And what's interesting from a sort of overall economic perspective, the vast majority of fab shops are very small. 75% of manufacturers in the US alone have less than 25 employees. So it's a small business anyway. When you start talking about fab metal shops, it's 95% have less than 25 employees. So this is a thoroughly integrated nationwide network of shops that make one or two or three parts and spread throughout mostly rural areas. It's a really interesting sector to watch.
That's interesting. I don't have much to add to what Chris said. Maybe add one thing and then ask a question of him. But the one thing I would add is that in the construction sector, when you look at commercial construction, which I know there's a lot of fabricated metal products that go especially into the commercial side, that whole sector has been fairly dead for the last year. There's been a couple spots of growth. So warehousing, anything to do with e-commerce fulfillment, a little bit of transportation and logistics demand. But most sectors inside commercial construction have really been halted just because of the pandemic. But those will start to emerge as we start to get into the middle part of next year. And, you know, there could be some things that the model is picking up to kind of show some of that resurgence and growth. And, you know, kind of to that point then, Chris, my question is, you know, there's a lot of legislation right now that the federal government is considering. Is there anything that you see in the infrastructure bill that would start to have an impact on an increased demand for things like fabricated metal products?
Well, interestingly enough, the fab metal people are not as interested in sort of the construction side of things as one would think, because they're not, generally speaking, these are not the ones that are producing rebar. They're not the ones that are producing the materials that go into heavy construction. They don't even have a lot to do with office building until the building is complete, because the fab metal is going to show up in the furniture. It's going to show up in the ductwork. It's going to show up in kind of the innards of some of these buildings. They've seen a bit of a downturn when it comes to office construction, but it has been made up for by the growth in transportation, logistics, warehousing, distribution, and what's going on with everything from creating data centers to the hospital sector. The infrastructure bill would probably help to a degree, but the groups that are more interested in that are the machinery makers, the ones who are making the tools, not as much as the people who are actually fabricating the metal. The big growth area for fab metal has just simply been that everything that you can think of now has to be housed in something. And the fab metal guys are the ones that are building the cage your air conditioner sits in, or the sink that's in your house. So it's been a growth market. If you take these numbers back a decade or so, you see some of that similar kind of emergence, again connected almost to the housing sector.
So if we look back a decade, um, here's your looking back a decade,
Mm-hmm.
and the change coming out of 2008. One of the things I wanted to mention was, if you see how this thing goes up, and you started on the previous chart, you could see that it would start leveling off here. I'm wondering, and we talked about this in one of the other sectors, how you kind of hit a plateau level. And you had a little bit of a plateau level here, a little bit of a plateau level here, overall a downtrend. But I'm wondering if we might be moving to another plateau level up here at a little bit of a higher level.
I think we probably will, because fab metals, as I said, it's always a dependent sector. It's really going to follow the same patterns that you see with a lot of the others. And right now, fab metal is matching up really well with, for example, computers and electronics and other things we've seen that have grown fast. But they're vulnerable. You know, you see a downturn in automotive, or you see a downturn in aerospace, it's going to hit the fab sector very hard. And the other thing about the fab sector, because these are such small businesses, they are so responsive. They come in and out of the market relatively quickly. And as a result, you can see really swift response to what's happening in the overall economy, because they don't really have the resiliency to kind of ride out downturns. I mean, when you have a downturn, a lot of these companies literally just go out of business for a while and then come back into business when there's a reason to get started. Their biggest long-term issue, and we kind of alluded to this throughout all these talks, not enough people. There's a labor shortage that's acute, and it's getting worse now at the upper levels, because many of these shops are run by people who started these companies in the 70s and the 60s and the 80s. They'd like to retire. They can't find anyone to turn the business over to, and succession planning has become their biggest concern.
So year over year, I don't know that there's a whole lot here that's unexpected. You can see the years have been running pretty much on top of one another. This doesn't pick up the rest of 22, which is where you see that large surge that we were talking about, but you can see the beginning of the growth surge here at the end of 2021.
Yeah.
Yep. I think this is one of those sectors that we watch almost as a reflection of the other sectors, and it becomes almost a lagging indicator, because you're going to see they're going to respond to changes in the other sectors usually a little bit late, and we may be seeing some of that pop up now.
Okay. Yeah. All right.
Very good. Okay, on to the next one.